Welcome back from Aspen. Stocks on a big three-day run following last week's big sell-off when Ben Bernanke telegraphed the Federal Reserve's timeline for pulling back the stimulus. Today, New York Federal Reserve President Bill Dudley walked that back a bit.
All that we can do is try to be as clear as possible in terms of our communications. And I think that, to be really fair to the chairman, I think he was very clear about how we would likely behave under a particular set of circumstances. It's perhaps possible that the market overweighted, the likelihood of that particular set of circumstances because life is highly uncertain.
So what does Jim Grant, the editor of Grant's Interest Rate Observer, think about the Fed's public declarations? Joining us right now, and a CNBC exclusive, is Jim Grant, founder and editor of Grant's Interest Rate Observer. Jim, always great to see you. Thanks for joining us.
Thank you, Maria. Nice to be here.
So what do you make of Dudley's comments on the market overreacting, essentially, to what Chairman Bernanke said last week about the Fed pulling back? Do you think maybe they weren't clear? Bernanke felt he wasn't clear enough, the market overreacted, so he's sending all these other people out to clarify?
Yes, I think that they are trying their best to press rates back down where they came from. You know, in the background to all this, Maria, is the scandal about rate fixing in the banks that dealt in LIBOR and other such administered interest rate indices. So in the foreground today is the Fed coming out in the persons of President Lockhart and Governor Powell and President Dudley coming out and saying, let us not have free market interest rates. Let us have administered rates. So somebody maybe one day will explain to me the difference in economic terms between the Fed manipulating rates and the alleged manipulations in London. But neither way, you're not getting a true market clearing interest rate.
And so the market reaction has been curious as well. I mean, Dudley also said that the Fed could be more aggressive if the economic data gets worse instead of getting better.
Well,
so what type of a scenario does this set up?
You can't just
I don't know that we have more clarity.
You can't just do a little QE or quantitative easing, it turns out. You are stuck. You must keep on doing it and doing it and doing it, which makes to me at least, the sell-off in gold, this relentless down 3% a day sell-off in gold, even more anomalous. I mean, the Fed is coming out and telling you that they are not going to do less of what they're doing, barring some sudden upsurge in activity, which it seems unlikely.
So I want to get to gold, but your latest newsletter is aptly titled "Return of the Invisible Hand,"
the revenge,
focusing on those unintended consequences.
Revenge of the invisible.
Yeah. Revenge.
Right. The idea is that the price mechanism, Adam Smith's invisible hand, will have its way. The consequences of manipulated and suppressed prices are delayed, but they do present themselves. And we saw the explosive rise in market interest rates in the past 2 weeks. The Fed didn't like what it saw, and I think is doing its best to put this back in the box. We'll see whether the Fed can do that. I think that whatever else this rise in rates means, it is a demonstration of the power of markets when at last they break the bonds of administered actions.
And we've actually started to see mortgage rates rise as well. Is that the tip of the iceberg and evidence that the Fed's grip on keeping rates low is actually not that firm?
I think it is.
Other rates going up.
The Fed's been buying billions of dollars of mortgages every month since QE3 started, and mortgage rates have gone up, not down. I think that the central banks have less control over interest rates than many people think they have.
So let me ask you about gold, Jim, because many people are bearish on gold. Why are you still so bullish? What do you see here? Habit
and conviction. First of all, hats off to the bears. They saw what I didn't see. But I think the question now is whether the move down is a matter of psychology or is it a matter of monetary analysis. Gold to me is money. It's nature's own money. It competes with the stuff they print. The central banks, are telling you they are going to keep on printing come hell or high water. At least that's how I read it. And in such a set of circumstances, wouldn't you want to own some insurance on things not exactly going to script? It seems to me that is the case, the short and compelling case for gold now. And as the price goes down, it ought to become more attractive. One of the bulls, I'm certainly a great gold bull, and I am chagrined, and I regret that I didn't see what was coming. But still, cheaper is better. Walmart as on Wall Street.
Right, so you don't see gold as a hedge necessarily. It's money.
I see it as an investment, and to me, the almost certain failure of this PhD standard we have, masquerading as a monetary standard. You know, what we have is complete monetary discretion by former university tenured faculty members, and it just doesn't sound as if this is destined to work out well. And if it does not work out well, you want something that is going to pay you in the way of a monetary asset, and I think gold is that option.
Do you think it was appropriate what Chairman Bernanke said, that, you know, if the data keeps coming in this way, we will begin to taper later on in the year?
Well, I do hope that sooner or later this country can get along without $65 billion a month of new money printing. That would be nice. But, you know, the trouble with data dependency is the data are prone to revision and are in any case inexact. So the GDP was to have been, the first estimate, 2.4%. No, that's not right. Actually, it's 1.8 or whatever it was. So that the data are forever inexact. The methods of calculation are matters of art and not science. And, you know, we can't pretend that what they're doing is not central planning. They are in the business of a kind of a seat-of-the-pants central planning. And we red-blooded Americans ought to recognize that for the likely failure that it is.
Yeah. Jim, always great to talk with you. Thanks so much.
Thank you, Bria.